Today on the Blockchain Report, Bitcoin's under 118K, but DC's suddenly acting like it wants to pump our bags. The SEC's vowing to make America the crypto capital of the world despite moonlighting as crypto's top courtroom bully. The Treasury's plan to fix the $37 trillion in U.S. debt. Well, Bitcoin turning number go up into official fiscal policy. And Coinbase drops $2.9 billion on Deribit, basically buying the Vegas strip club or strip of crypto derivatives. All that and more right now. Let's go! Definitely not strip club. Good morning, my blockchain beauties, and welcome back to another episode of the Blockchain Report, your daily reminder that Bitcoin doesn't care about your feelings. I'm your host, Hank Hudson, broadcasting live from the Bay Area, where the rent will drain your soul, the parking meters run on extortion, and ordering avocado toast comes with a credit check. Thank the good Lord Satoshi, it's Friday, that magical day where you're physically at work, but you're mentally at a bar convincing yourself that $19 cocktails are an investment in your own happiness. Now, before we cannonball into today's steamy hot tub of crypto tomfoolery, let's keep it classy and hit that like button like it's the sell order you completely ignored at the top, and follow RoxomTV and yours truly at Hank at RoxomTV, because if I'm dragging myself out of bed at 4 a.m. every day for you guys, it's not so my mom can proudly tell her bridge club that I have a little YouTube channel, so hit those buttons. All right, we got a lot to cover today, but before we get into the madness, let's see if the markets are serving filet mignon or cold gas station sushi in this morning's market rundown. Let's hit it. All right, holy guacamole, let's see how things are looking this morning, and it's not great. Right now, Bitcoin is hovering just above 117K. We had all-time highs seemingly like 48 hours ago, but the good Lord of finance has other plans for us right now, as we have drawn all the way back down to about 117K. Ethereum also on the let's pull back bandwagon, now beneath $4,500 a coin. XRP sitting at about 305 a pop. Cardano, the one lone bright spot in the last day or so, they're sitting almost at 94 cents a piece. And Dogecoin doing what it does best, which is nothing, sitting at about 22 cents a pop. In the stonk market, things are looking kind of more the same. The Dow Jones is currently just beneath the $45,000 mark. The NASDAQ Composite's down about 0.5% this morning. The S&P is currently chilling at about 6,400. All right, we got a lot to go over today, so we're going to take a quick break. When we're back, we have our first guest of the day, so stay tuned. More Blockchain Report right after this. All right, welcome back to the Blockchain Report. We are going to get started this morning with our special guest who is going to be joining us for today's bull run, and then we'll get into our deep dive with them in just a bit. Now, he is a man on a mission to make sure that your cloud isn't just someone else's computer in a warehouse in New Jersey. He's leading a team at Start9 that's building technology to take the internet out of the hands of big tech, big government, and anyone else who thinks user data means our property. His mission is simple but radical: eliminate the need for trusted third parties entirely, put the individual back in control, and make privacy and free speech non-negotiable parts of modern life. He's here to talk with us about sovereign computing, the fight for digital independence, and why the future of the internet belongs to the people who actually use it, not the corporations that mine it. So let's give a big Blockchain Report welcome to today's guest, Matt Hill. Matt, welcome to the show. Me and my audience here are super pumped to have you. How are you this morning? Thanks for joining us.
Fantastic intro. You really nailed it. I've been on a lot of these shows, and I think you summed up what we're doing philosophically pretty well. Great job.
Oh, well, I appreciate it. You're doing some great things out there, and we certainly are excited to learn more about that. And we're going to get into today's stories here in just a second, Matt. But before we do, I'm sure there's at least a couple people in our audience that aren't yet familiar with you and your work. So how would you go about introducing yourself to them and the work that you're currently doing at Start9?
As you mentioned, I and Start9 are on a mission to disintermediate computing infrastructure, namely to put individuals, families, small businesses back in absolute total control of their data and communications. We do that primarily by making a server operating system called StartOS that makes it easy for someone to own and operate a personal server, and then use that personal server for all their basic computing needs, from messaging to cloud data storage to running a Bitcoin node, all without needing to ask permission from anyone, all without their information or data being stored on or processed through a third-party server. And they can do it with impunity and total privacy and censorship resistance. And we think that this is how the internet should exist and how people should interact with computers.
I couldn't agree more. There's two things I love. It's freedom and privacy. So I think we are on the same page, my friends. So what's going to happen now is we're going to go over the top stories of the morning. I'm going to ask that you hang tight while we read them over. Then we're going to bring you back and chat about them. Sound good?
Sounds good.
Rock and roll. All right, first up, let's roll it, Victor.
We're focusing on what we can do to make the regulations of the SEC encompass the crypto assets and also make it so that people can have some clarity going forward.
Well, grab your popcorn, boys and girls, because the SEC is apparently putting on its big boy crypto pants in a rare moment of governmental unity. President Trump has told the SEC to make America the crypto capital of the world, which, let's be honest, is a way better campaign slogan than anything we've heard in the last decade. And for once, instead of just holding hearings, they say they're actually doing something. I know, wild concept, right? Let's take a peek at the video and see what the SEC chair, good old Paulie Atkins, had to say on Fox Business News this morning. Let's roll the clip.
So a couple of weeks ago, the administration issued the President's Working Group's report on digital assets in the United States, and there were clear directions to the SEC. We're part of the PWG, that President's Working Group, and clear recommendations for us to go forward and help make what the President has announced, his intention to make America the crypto capital of the world and have the world run on American technology. So we're mobilizing at the SEC all our different divisions and offices to focus on making that announcement become reality. So that's with our corporation finance division, investment management, and others. We're focusing on what we can do to make the regulations of the SEC encompass the crypto assets and also make it so that people can have some clarity going forward. We're working with Congress. Obviously, the Genius Act was enacted here a few weeks ago with a big announcement at the White House by the President himself, and as he signed it. So that, I thought, was a very good step forward. And now there are other bills in Congress that are being considered, and when they return from their recess, I look forward to much more forward progress.
All right, thanks, Paul. Now, the first question you're probably asking is, why were all the words coming out of this man's mouth important? Well, first, the fact that the SEC is openly saying they're mobilizing across all divisions to make America the crypto capital of the world is a seismic narrative shift. For years, the agency has been the grumpy hall monitor of digital assets, handing out detentions left and right. Now they're talking about integrating crypto into the U.S. financial system with clarity and intent. Or in other words, we're finally moving from regulate by enforcement to regulate by blueprint. That's a big deal for businesses, investors, and anyone who doesn't want to hire 3 lawyers before sending a transaction. Secondly, the timing of all this matters, okay? The Genius Act has already passed, and more bills are in the pipeline. This isn't just lip service here, gang. It's legislation with real momentum. Once Congress is back from recess and done playing political dodgeball, we could see a wave of pro-crypto policy that creates the kind of regulatory certainty institutions need before committing some serious capital. And that's the kind of stability that could trigger a flood of investment. Something Bitcoin in particular has historically responded to like a kid to Halloween candy. Finally, this is about global positioning, okay? If the US really wants to lead crypto, it has to beat out countries that have been sprinting ahead while we've been stuck in committee meetings. Clear rules, friendly policy, and SEC support could put America in pole position for attracting both blockchain innovation and capital inflows. So if the SEC really does what it says here, we might actually get the rarest thing in Washington: clear rules, less confusion, and a shot at making US the place where crypto innovation doesn't have to hide in the shadows. But I think I'll believe it when I see it. All right, we're bringing Matt back. And Matt, the SEC says it's going to make America the crypto capital of the world. Is this a genuine change of heart or just the hall monitor trying to be cool at prom? What do you think?
Oh boy. Fair warning and small disclaimer for your audience. I'm what most people would refer to as a cypherpunk. We, fundamentally believe that the best way to, affect large-scale political change is by writing code, in particular by writing code that enforces privacy, censorship, resistance, and individual rights, and not going through the traditional avenues of political infrastructure to achieve our ends. Now, that said, it would be silly to state that what happens in Washington doesn't matter, right? It is important. It affects the nature of the landscape and the nature of the battles that will follow. So it is of interest. It's not my top concern. I spend most of my time just writing code that makes the world do what I want it to do. But I would say that first and foremost, a statement by the SEC saying that they will make America the crypto capital of the world is also a bit silly. They literally have the ability to make nothing. The SEC doesn't make anything. The best thing that they can do, in my opinion, is as little as possible. Clarity is paramount, as you mentioned. I do think that regulatory clarity is really important, especially for regulated institutions as they approach this sector. But minimalism is ideal, right? The less, the better. The clearer, the better. When I hear a bunch of bills coming down through the pipeline and all the different departments, being whipped to action, that doesn't sound good to me, right? I don't like the various agencies of the federal government looking and getting interested in and active in the Bitcoin world. I want them to stay out, but I do want clarity, right? I do not want ambiguity around legality, for sure.
Yeah, and even as a cypherpunk who kind of rules by the code that you write, for something like Start9, is it fair to say that friendlier regulation can actually make a difference with what you're doing, or is the whole point to be bulletproof no matter what the rule book says?
Yeah, I mean, the long-term goal is to throw the rule book out the window. Obviously, there are very practical considerations along the way, right? Like, we don't want to end up in jail or dead, but right. we believe that technology affords leverage that is far beyond what any form of political leverage can afford. So, we think that if we invent the right technologies and that people adopt those technologies, that politics will follow, that regulation will follow reality, as opposed to leading with regulation. Again, there's different people fighting on different fronts, and I'm not against anyone who is trying to, fight the good fight within the political sphere. I just think that it is far less efficacious because it is far less leverage than what Satoshi did, for example. Satoshi didn't go and, try to get a bill passed and ask the SEC if he could invent some new money. It was just did it in an open source, brilliant way, and just unleashed it upon the world. And I guarantee you that if Satoshi's identity were known, he would not be a free man today. So, following in the footsteps of greatness, much better to beg forgiveness than ask permission. But even better than that is to just do something that warrants neither. Just fundamentally change things.
Yeah, well put. I think you just coined my new t-shirt, make regulation follow reality. I think that's the t-shirt we can market to Cypherpunks everywhere, so I love it. All right, take a break there. We're going to go to the next story and then go on with our next question, so you sit tight there, Matt. All right, U.S. Treasury Secretary Scott Bessent has decided to clear up the confusion on America's Bitcoin strategy. Apparently, the Trump administration is going all in on building a strategic Bitcoin reserve, the kind of thing that sounds like a Cold War bunker for sats. Bessent says the plan is to use between $15 billion and $20 billion worth of Bitcoin already forfeited to the federal government. So yeah, Bitcoin confiscated from various don't worry about where it came from situations is now national monetary policy. Now this comes after Bessent went on Fox Business earlier in the day and said the U.S. wouldn't be buying any Bitcoin. Now he's clarifying. It's not about spending new taxpayer dollars. It's about budget-neutral options to pile up more Bitcoin and fulfill the president's promise to make the United States the Bitcoin superpower of the world, which is a nice step up from the world's biggest holder of IOUs. Senator saying, hey, there she is, saying she has the perfect solution, her Bitcoin Act. But she also warned you don't solve a $37 trillion debt crisis by just buying Bitcoin outright. Instead, she suggests revaluing America's gold reserves to current market prices, then taking the surplus and using it to beef up the Bitcoin reserve. It's the kind of fiscal judo move where you end up holding more gold and more Bitcoin without asking Congress for another $1 trillion. The bigger picture here, though, is nation states are now openly competing for Bitcoin as a hedge against inflation. Institutional buyers already kicked off a supply squeeze with corporate treasuries and spot ETFs. If the U.S. starts strategically stacking sats, that squeeze could become a chokehold. And in Bitcoin chokeholds, they tend to make number go up. All right, we're bringing Matt back. Matt, the U.S. says it's going to build a strategic Bitcoin reserve. Is this a power move or just a PR stunt that makes them sound cooler than they actually are?
Oh God, I have no idea. When the Treasury Secretary says two contradictory statements in the same day, it's very clear that there is no concrete policy and that they're flying by the seat of their pants here, and that there's jockeying interests at play. Right? This tells me that there are donors, there are influencers within the political sphere and the business spheres that want different things for different reasons, and they're all just trying to jockey for control here. So we'll see kind of who ends up winning this battle. We probably don't even know all the players here. There are definitely people who want the continued supremacy of the dollar as the global reserve currency and America's mechanism of kind of international debt slavery. And I would argue that is the majority opinion at the federal level. And so anything to the contrary, anything that they say to the contrary, I take with a degree of suspicion. I view most of their jockeying around Bitcoin as a degree of covert warfare. So the United States is considering, a strategic Bitcoin reserve beyond what they have just stolen from individuals and kept for themselves, meaning they are attempting to use taxpayer funds to buy Bitcoin. I would consider that equally atrocious in terms of morality, right? Stealing money from a population to buy durable, tangible assets for the state, I consider to just be fundamentally immoral. However, it could expedite the decline of the dollar, right? If they were stupid enough, in my opinion, to adopt Bitcoin as, a treasury asset and hold it, it would further undermine the dollar. It'd be good for us. So it'd be good for number go up, right? If you're interested in Bitcoin price going up, a United States strategic reserve is a good thing. If you're interested in Bitcoin becoming the global reserve currency, it could also be a good thing. But if you are the United States government yourself looking for the continuation of dollar supremacy, I just don't see it happening. I can't see why they would do this.
Yeah, from a sovereignty standpoint, then I guess you're not a big fan of the United States going on and accumulating it. Because I was going to ask, does it matter if you're holding it, if I'm holding it, if Uncle Sam is holding Bitcoin, or is somebody's holding it good enough? But it kind of sounds like you'd prefer it to stay out of the hands of the government.
Well, there is no right. The government is the people in theory, right? And so,
Sure.
but the people can't hold the Bitcoin, right? Whoever holds the Bitcoin owns the Bitcoin, right? Even if you have Bitcoin and it's sitting on Coinbase, it's not your Bitcoin. It's Coinbase's Bitcoin. Like Strategy, for instance, from a paper standpoint, might quote own some Bitcoin, but they don't actually own it because it's being held by a custodian, and therefore can go missing. I mean, Coinbase is holding the vast majority of, we're going to talk about Coinbase in a little bit, I think. So I'll hold off on any Coinbase rant here, but, I'm fundamentally against expropriation of wealth by nation states of their people, AKA taxation. So, it's like, am I against the United States government buying Bitcoin? My immediate question is, with whose money, right? I mean, are they going to print dollars to buy Bitcoin? Because that is an attack against the lower middle class of the entire country. It's going to cause massive inflation. Now, sure, those people have the same opportunity as everyone else to hedge against that inflation, to buy Bitcoin, but are they going to? No, they're going to be the last ones to the party. And so I think the United States printing trillions of dollars to buy Bitcoin would be a massacre of a major portion of the country. And I'm not really for that, right? I don't care. There are definitely worse things the government could do with printed money, right? They could use it to build bombs and kill a bunch of people, which they do. But even more so, or to a lesser degree, I'm against them using our money to buy wealth for themselves, right? It's not their money.
Yeah, no, that's very fair. It's we can't have Nancy Pelosi getting any richer than she already is, given all the insider info she seems to take advantage of on the reg. It's amazing. She gets like 180 grand a year. She's worth God knows how much. Not good.
Yeah, definitely.
All right, we're going to talk about Coinbase here. Go ahead.
Okay. I'm done.
Yeah.
Go ahead.
All right, we're going to talk about Coinbase. We'll be right back with you in a sec, Matt. As Coinbase has officially closed its $2.9 billion acquisition of Deribit, that's $700 million in cash and 11 million Coinbase Class A shares, or as Wall Street calls it, the kind of flex that gets you invited to all the good yacht parties. Now, with the deal done, Coinbase is now the world's largest platform for crypto derivatives by open interest and options volume, which basically means they just bought the biggest high-stakes poker room in crypto, except instead of cards, everyone's betting Bitcoin, Ethereum, and whatever altcoin happens to be the flavor of the month. Deribit isn't some niche shop either. They are the undisputed champ of crypto options, moving $1.185 trillion worth in 2024 alone, nearly double their 2023 volume. And they don't just deal in boring contracts. We're talking inverse Bitcoin and Ethereum options, USDC settled contracts, perpetuals on major altcoins, volatility futures, tokenized gold. Pretty much every way to make or lose your shirt without physically touching an actual coin. July 20 of 25 was their best month ever, 185 billion in volume, 59 billion in open interest, which is basically a giant welcome banner for institutional money. Now, all of that liquidity and global reach is living under Coinbase's roof. The acquisition also plugs Coinbase straight into the offshore derivatives market, a place where trading volume regularly crushes spot markets and where the rules are more guidelines than actual laws. Deribit even stated letting traders post tokenized U.S. treasuries as collateral, including BlackRock's Butyl Fund, which so they can earn yield while still swinging for the fences. Founders John and Marius Jansen are exiting stage left, but the core systems and services are staying put. So for Bitcoin traders, the biggest, deepest options market in the game just got the Coinbase turbo boost. And if Bitcoin keeps heating up, this derivatives empire could make number go up happen a lot faster. We're bringing Matt back. Matt, Coinbase just bought the world's biggest crypto derivatives shop. Is this good for Bitcoin's grown-up image or just more Vegas energy being put into the markets? What do you think?
It's probably both. I mean, it's definitely going to legitimize Bitcoin and crypto trading in the Wall Street circles even more than it has been. Derivatives are just a massive, massive market. I'll share a little backstory and anecdote, actually. I have some decent insight here. Back in 2017, it wasn't quite then. I joined the company in 2017, but back by 2019, I was the CTO at Salt Lending, which is a Bitcoin and crypto backed lending platform, and they're still around today. And I was preparing to leave that company due to some ideological differences with the CEO. And in that process, Coinbase tried to acqui-hire me and the rest of the engineering team from Salt to go build a crypto-backed lending platform at Coinbase. Coinbase wanted to throw their hat into the lending ring. They wanted to do, loans collateralized by crypto, and they wanted us to come over there and build it just as we had for Salt. And we declined because we didn't want to work for Coinbase, right? We were more of a startup team and wanted to do our own thing. And so we considered for a few weeks actually building a Bitcoin derivatives exchange. That was our first idea after leaving Salt, right? When I left Salt, I took the core engineering team with me, and we were looking for what we were going to do next. And our first idea was a derivatives exchange. So we definitely saw immense value in the venture. And, had we pursued that, we'd probably be stinking rich today. But ultimately, we decided against it because of the fact that we would have basically had as many, lawyers and SEC regulators in our office as engineers. And that was so distasteful to us that we just thought we would kill ourselves. So we actually, didn't pursue Bitcoin derivatives as a business model simply because it was just insanely boring TradFi BS, regulatory driven, and we, didn't suit our worldview and what we would want to do and be proud of with our lives. So we ended up doing Start9, which is radically, the total other end of the spectrum of starting a Bitcoin derivatives company. But, just to show we were being thoughtful and putting all options on the table. So anyway, that's just a little bit of a backstory. We've thought about this a lot. I do think there's a massive market for options and futures around Bitcoin and the entire crypto industry. Obviously, it's going to grow to trillions and trillions of dollars of market capitalization in the coming years. There's a lot of money to be made, both on the ups and the downs. There's going to be a ton of manipulation. It's going to be all rigged and everything else, right? It's basically taking, Bitcoin, the open source, permissionless, global money, and building Wall Street on top of it. And, it's like, it's fine. I'm not you can't stop something like that. Again, probably very good for number go up technology. Not something that particularly interests me. Coinbase is very boring to me. I see them as a exchange and bank that bought another exchange and bank, and that's no different than Chase buying BMO, right? Like, I just view that as old world doing old world stuff. Coinbase is old world.
Yeah. No, absolutely. And I got to say, a lot of respect for you still, choosing to follow your compass, even knowing like, this could probably be a pretty profitable endeavor for me and my people, but knowing that just doesn't align with your vision and your values, and choosing to go your own path. And, specifically starting Start9. So we're going to talk about that in a sec, but we're going to run the stinger and get into our deep dive here and learn more about you and all the things you're building. So Victor, if we could run that, please, let's do it. All right, we're back here with Matt from Start9. Matt, I want to start kind of at the beginning here, your origin story. Before Start9, before sovereign computing, where did this all begin? What first got you interested in technology and personal freedom?
I've always been interested in technology, and I've always been interested in freedom. I was a very obstinate child. I always had a problem with authority. Not for its own sake, just because I wanted to understand, right? If someone said, do A, or A is correct, I would say, why? And explain it to me, right? Like, I just didn't like taking things on faith. I wanted to understand things. And if someone could convince me of something, then I would be convinced. And if somebody, if I had determined that somebody was worthy of my followership, if they were, good and honest and productive, and I had something to learn from them, then I was the best follower they could ask for, right? I loved having various mentors over the years. So I'm not against authority for its own sake. I'm just against the sort of faith in authority, where, anyone who has the right credentials can say what's the truth or what to do, and everyone just listens, right? So I'm fundamentally against that. Now, technology always just been an interest, but it wasn't until I started getting really political, that the two began to click, right? So Ron Paul was my real introduction to politics. Prior to that, I had a very basic level of political understanding and history, and it was kind of like red, blue, and then I learned about libertarianism, libertarian philosophy through Ron Paul and through Ayn Rand, and became convinced that some more fundamental change was necessary if we were going to build a truly kind of free and prosperous future for posterity. And I tried to do that, as many people would, through the political apparatus, just as Ron Paul did, right? So I was campaigning for Ron Paul in 2012, and I was very hopeful and optimistic about that campaign. I mean, he was packing college stadiums full of very, very smart, very enthusiastic young people chanting "End the Fed." And in my mind, I saw this as a viable path, right? I thought that Ron Paul was really going to make a difference. I thought he even had an outside chance of being elected president when he switched to the Republican Party and ran under that ticket. And I severely underestimated the degree of power wielded by the incumbents. And I watched what they did to Ron Paul. I watched how they shut down arguably the most powerful freedom movement in modern history. And they shut it down really with like the flick of a pen. It was very easy for them to shut Ron Paul down. Basically, they did so by not saying his name in any mainstream media outlet. And when they did say his name, they made sure to laugh. So if and only if they ever mentioned him, it was in a joking manner. They never took him seriously. But that actually tells me they were taking him very seriously, and that this was actually a tactic. But it worked really, really well. Most of America didn't even know that it was happening, and those that did know that it was happening were either laughing at it or being like, "Oh, that's nice, but he doesn't really have a chance." And I said, "Wow, how do you beat something like that? Like, how do you overcome something so powerful that it control the narrative with minimal effort?" And I, at the same time, or not exactly at the same time, but a couple years later, learned about Bitcoin. And I, once I kind of got it, I said, "Oh, there is the underbelly of the beast, right? There is its weakness is you don't need to come at it through the political apparatus. You chop it off at the knees. You undermine its source of power, right? What is the way in which all those media outlets were funded, right? Well, how is propaganda even possible? And it's all comes down to the money printer, right? The ability of governments to create money from nothing is their ultimate source of power, and Bitcoin is its ultimate antidote, the ultimate defense against that attack on the people. And so I became obsessed and devoted to doing everything that I could to making Bitcoin succeed. Bitcoin as Bitcoin, by the way, not what Bitcoin is starting to become in certain circles, which is this custodied, intermediated paper Bitcoin situation. I want Bitcoin to be like gold, except transferable over the wire instantaneously around the world, but basically not a state-issued asset or state-controlled asset. I want Bitcoin to be open, permissionless, global distributed money, as it was designed to be. And so I am on a mission to help make that happen in any way that I can. And in 2019, when we left SALT and we're thinking about what we wanted to do next, part of that discussion revolved around what could we do to help Bitcoin succeed. And for those who do not understand this layer of Bitcoin, what gives Bitcoin its decentralization at the core, right? There are lots of contributing factors to Bitcoin's decentralization, but the fundamental one is node operatorship. It's people running Bitcoin nodes and using them to verify and conduct financial activity. And at the time and today, there are very few people around the world running Bitcoin nodes, right? It's just not an insanely popular thing by comparative standards, right? There's a few dozen thousand people running Bitcoin nodes, and that's it. But there's billions of people in the world, so it's a minuscule number. And if we want Bitcoin to remain decentralized, we need more people running nodes, more people using those nodes. And so we asked ourselves, what is preventing people from running a Bitcoin node? And one of the main reasons that people were not running a Bitcoin node, aside from just ignorance of the matter altogether, was its difficulty. It was not particularly easy to run a Bitcoin node. It required a degree of technical acumen, namely the ability to download, compile, and run a piece of open source software on a machine, to be able to configure it and maintain its uptime over time. And while that is pretty easy for somebody who has even basic computer and command line skills, it is basically impossible for someone who does not, right? It's unthinkable, regardless of how easy some IT people think it is. Most people would just never do it. So we set out to offer a product, to build and sell a product that would enable a normal person to, in a few clicks, have a Bitcoin node and to be able to use that Bitcoin node for all their financial activity, and thereby increasing Bitcoin's decentralization and its survivability. Once we realized that that's what we wanted to do, we also quickly realized that if we could do that for Bitcoin, if we could make it easy for somebody to download, configure, own, operate, and maintain a Bitcoin node over time on a server, that we would essentially be solving a broader problem in computer technology, which is the ability to run a server at all and to run any variety of self-hosted open source software on it. So, to give a quick example, rather than just solving the problem so that people could run a Bitcoin node, we solved the problem in a more general sense so that people could use a server to run a Bitcoin node, to run a Lightning node, to run a file server, to run a messaging server, to host their blog, to host their website, to host their e-commerce site. All of these things fundamentally required the same skill set. And we attempted to abstract that skill set into an operating system, a point-and-click graphical operating system that would make it easy for anyone with basic computer skills. And I don't mean command line skills. I just mean the ability to navigate a Windows desktop or a Mac desktop or an iOS or Android phone. Anyone with the ability to administer basic computers would also be able to administer a server, which is a kind of computer that most people have, if they've heard of it, it's always some vague thing that lives somewhere else. Most people have never actually considered running a personal server in their homes for their own purposes. And one of the main reasons for that is because it was very difficult to do. So in solving the Bitcoin node problem, we were also inherently solving the personal server problem, making it easy for people to own and operate personal servers for any purpose. And once we realized that that's the problem that we were solving, we got very, very excited, because if we do solve that problem, not just us, right, but the whole open source world, if we and others make it easy for individuals, families, and small businesses to own and operate a personal server and to use it, to really use it, it would fundamentally restructure the human-computer relationship on Earth, which in turn would fundamentally restructure the political infrastructure to accommodate, right? Most of the regulatory, military and law enforcement apparatuses that exist within the digital sphere assume a central party. They assume a central trusted party. For example, if a company or a government wants to censor you or invade your privacy, they can go to one company and just ask for the information. They can say, tell me everything about this person, or give me, access to this person's camera, for example. And that all assumes that you, the person using the computer or using the camera, is using it through this third party. And therefore the third party is now a security vulnerability for you. And if you run your own server you have eliminated that vulnerability, right? Somebody would have to physically show up to your house and serve a warrant to get the data that's on your computer, on your server, or the video footage that was collected by your camera, which is more traditional, right? Like that's how warrants used to work in the past, is like if you had something, documents or otherwise, and law enforcement wanted it or a company wanted it, they had to come ask you for it or pay you for it or get a warrant from a judge to obtain it. But once we started shoving everything onto third-party servers, that is no longer necessary. Right? The third-party doctrine introduced by the Patriot Act undermines the Fourth Amendment and says that any piece of data, anything, any conversation, any photograph, any file, anything that you place willingly onto a third-party server, which is pretty much everything you do on a computer, is not subject to Fourth Amendment rights to illegal search and seizure. The government does not need a warrant to get every email, file, and photo you have ever taken from Google. They can just walk into Google and ask for it, and Google will hand it over and not tell you about it. That is the truth. So we're out to fundamentally change that because we think it's undignified, right? It's also extremely dangerous, but it's just undignified. It makes no sense. Anyway, so bit of a tangent there, but there's a high-level introduction.
Yeah, no, and we're totally here for it. I want to kind of rein it back, though, in terms of like Bitcoin. So we have obviously a very Bitcoin-friendly audience here. What role does Start9 play in making Bitcoin use like truly sovereign instead of sort of sovereign until you end up logging into Coinbase? Can you go into that a little bit more for us, just maybe in terms my Meemaw could understand?
Yeah, absolutely. So there are two really important mantras in Bitcoin if you want to, quote, do it right, okay? One is not your keys, not your coins, right? Which means hold your own Bitcoin, okay? If you buy Bitcoin and place it with a custodian, like you buy it on Coinbase and you leave it on Coinbase, Coinbase has the keys to those Bitcoin. You do not. You have to then ask them for permission to withdraw it, to spend it, to sell it. And there's an enormous risk introduced, which is that Coinbase could lose it, okay? And servers, which is where, all of this information lives, are vulnerable. It doesn't matter how many layers of security and how big your cybersecurity team is. Any server that is storing billions and eventually trillions of dollars of wealth is gonna get attacked. And it's only a matter of time before the people with the keys to those servers get compromised in one way or another, right? Blackmail, bribery, threats, you name it. The people with the keys will eventually be identified and compromised, and the Bitcoin will go missing. I consider it inevitable that any exchange holding a significant amount of Bitcoin will be hacked. It is inevitable. And so it's very, very insecure to leave your Bitcoin with third parties. And that's number one. And we don't do anything about that. Start9 is not in any way involved in holding your own keys. Those are hardware wallets, right? Those are various forms of self-custody that I would highly recommend everyone interested in Bitcoin research. And they've come a long way. That's a very mature industry. The second key component of being a, quote, true Bitcoiner, doing it right, is running a node. Bitcoin is a network of nodes. It is a peer-to-peer network of connected servers, all running software that conform to the same protocol, the consensus rules of the Bitcoin network. And Bitcoin is what it is. All the value, all the trillions of dollars of value, all the derivatives, the whole reason the US government and everyone else is interested in Bitcoin stems from this root idea that Bitcoin is fundamentally different than a database. It is fundamentally different than anything we have ever seen. And the nature of that fundamental difference is twofold. One is the distributed nature of the peer-to-peer network. And number two is the proof of work mining algorithm and infrastructure. Okay, those are the two things, if I had to cherry pick, that make Bitcoin Bitcoin. And so running a node, And also doing some home mining, sure. Like home mining is a thing. People buy little miners, and you're not going to like make a recurring income on it. Those days are long past, but you could absolutely play the lottery, right? Potentially hit a solo block and have a $300,000, $400,000 payday. Totally KYC, by the way, if you're doing it right into your own node. But that's, kind of less. Running your own node is, in my opinion, almost just as important, not quite, but almost as important as holding your own keys, in that it makes you a sovereign participant of the Bitcoin network. If you are not running your own node, you are using someone else's node. There is no way to use Bitcoin, no way to receive a transaction or send a transaction, to use Bitcoin without using a node. So if you are not using your node, you are using someone else's node. And if you are using someone else's node, you are relinquishing a degree of control, a degree of sovereignty, namely privacy and security. Those are the two things that you are giving up when you use somebody else's node. For example, if you download a Bitcoin wallet onto your phone, open it up, and receive money, and that's all you did. You downloaded it, you opened it up, you popped a QR code, somebody sent you some Bitcoin. When you do that, by default, the wallet on the phone is remotely connecting to a node that is owned and operated by the same people who built the wallet. So when someone sends you money, sends you Bitcoin, it goes through that node and arrives at your phone, which means the wallet developers, the people who built the wallet, know you got that money. They know who sent it to you potentially, they know who you are, and they know how much Bitcoin you have. You have fundamentally relinquished a degree of privacy over your financial life when you download a wallet and just use it. If, however, you download that wallet, you go into the settings menu and you swap out the node. You say, I don't want to use your built-in node that's going through your server. I want to use my own node. And you go into the settings menu and you put in the address to your node. This assumes that you're running a node, right? That was kind of the prerequisite to this whole anecdote. You are already running a node, and we make that easy. That's what we do. If you want to run a node, you come to us. We have free and open source software. You don't need to pay us a dime. You can just download our software, flash it onto an existing laptop or mini PC that you own, and you will be up and running a Bitcoin node in 10 minutes or less. Okay? It's very easy.
Wow.
Many people have been doing it for over 6 years now. We've been in the market. If you don't have an old PC or feel comfortable downloading our free software and flashing it to the computer, you can buy a computer from us, right? It's totally opt-in, totally private. There's no account with us. We just send you the computer with everything, with the operating system pre-installed. You plug it in, push a button, and you're running a Bitcoin node. Now you go download that wallet to your phone. You go into the settings menu. You put in the address of your node, and now you can transact. Someone can send you Bitcoin, you can send them Bitcoin, and there's no third party, no intermediary, nobody on earth knows that you have received Bitcoin or are sending Bitcoin. It is 100% provably private, and you're doing your own validation. You and you alone are your own oracle. You are validating the transactions that you receive. You are not trusting your wallet provider to tell you the truth, because they don't have to, right? If you're using a wallet that you downloaded and just started using, right? You download the wallet and you receive money, you don't actually know. You cannot actually prove in that moment that you received that money. The wallet provider could absolutely have faked it, and you would have no way of knowing unless you did additional research and cross-referenced it with other nodes and block explorers. The surefire way to know that you have received money on the thing that you call Bitcoin is to run your own node and connect your wallet to it. And it's very easy to do, and it's very, very important. And if everyone does it, Bitcoin survives. The essence of Bitcoin survivability above all else is node operatorship, people owning and using their nodes. And we make that easy. That's what we do.
Amazing. Well, I certainly appreciate that breakdown. I know you got a hard out, so we're going to let you go here in a second. But before we do, I'm sure there's plenty of people in our audience that are like, I want to be a sovereign participant in the Bitcoin network and run my own node. what is the best place for them to go to so that they can check out all the things you're doing and then, potentially run their own node like you talked about?
Well, you're showing it on the screen right there. Best place to start is start9.com. I would recommend to anyone considering this to actually look at the reviews that we highlight at the top of the page. When people leave us reviews, they tend to be full pagers and they tend to be raving, and that's not for no reason. It's because most people are shocked when they learn that it's not BS, that they can do this, that they use our software or our hardware products, and within a few minutes time are up and running their own node. Our team is fantastic on the support front. If at any time you feel like you're in over your head or you don't understand something or something isn't working, we have people online 18 hours a day. Our average response time to any and all customer inquiries across all platforms is under 3 minutes for the last 5 years. Wow. You will get a technical, caring human on the line with you in under 3 minutes to help you with your issue. The good news is most people don't have issues. It's that easy. Most people just buy it, download it, run it, use it, and then rave about it. And so check out the reviews and then go to the store if you are interested in buying a device from us. If you already have a mini PC or laptop that has sufficient computing power, go ahead and just download our software for free and spin it up. You can also just buy support from us, right? Like if you do install StartOS on your own computer, you can just buy a lifetime membership to our support channel, which is shockingly cheap for lifetime support for immediate access to a technical expert, $300 for life. It's not going to stay like that forever, by the way. We're not going to be able to afford that at a certain point. It's going to be a lot more expensive. Yeah. You can do that as well. So we are, in essence, a services company. Yes, we sell hardware, but we make open source software that is totally free. And so the only way that we can sustain our business model and really matter into the future is just by being awesome, by providing great customer support and having integrity in everything that we do. And that's what we do.
That's amazing. And Matt, I got to say, thank you so much for your time today. You have such an interesting and informed point of view, and I'm sure our audience agrees. Do you have an X account that you can share with us so that our audience can check out more of your takes? Because I know I'm not the only one out there that would love to learn more about your view of the world. What would be the best place that they could go to follow you?
For sure. So the Start9 Labs account is at Start9 Labs, and my personal account is _MattHill_. There's a great video, a talk that I gave at the Denver Bit Devs meetup a couple of years ago that really digs into why you would want to run your own node, and it provides a good overview of the whole landscape pinned at the top of my feed. So check out that video. It's a great starting point. And yeah, we're always happy to welcome more node operators and quote unquote true Bitcoiners to the world.
Amazing. Well, we certainly appreciate all the efforts that you and your team are putting into towards self-sovereignty for everyone in the future and the Bitcoin network. And next time you have any kind of new product releases or anything, we'd love to have you back on to chat about it. I feel like we could talk with you all day and learn about your more about your informed points of view. So thank you so much for your time today, Matt, and I hope you have a great weekend.
Yeah, I appreciate the platform, and sorry if I threw a wrench into some of the newscasts. I don't want to be like some antagonistic, bitter guy. Like, cool, the great things are happening in the Bitcoin world, but I do think it's important that every once in a while people take a step back and think what this is all about, right? Ultimately, this is all about the freedom of our great grandchildren, and that's how long it's going to take. It's nice to have the number go up right now. It's nice to see, people, even powerful people, realizing the potential and importance of Bitcoin, but eye on the prize, eye on the ball. This is about freedom, and it's really important in my mind that we don't sell freedom for the sake of, short-term riches. That would be very sad. So anyway, thank you for hearing me out, and thanks for having me on.
Oh, we appreciate you and your time, Matt, and thanks for fighting for our freedom, brother. We certainly appreciate it, and I hope you have a great weekend. Cheers.
You too. See ya.
Thank you. All right, we're going to take a quick break, but when we're back, more Blockchain Report underway, so stay tuned. We'll be back right after this break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, and we're back with more of this morning's bull run. A quick thank you again to Matt Hill and his team over at Start9 for all they're doing to protect our freedom and sovereignty out there. So make sure you go check him out. Really appreciated his time and viewpoints this morning. Back to the news, though. Now, in what seems like an eternity ago, back on July 14th of this year, Bitcoin hit 122,600, punched a $2.4 trillion market cap into the scoreboard, and yeeted Amazon down to 6th place. That's right, Jeff Bezos can go back to selling air fryers and Prime subscriptions because Bitcoin is officially a bigger deal than 2-day shipping. It wasn't gradual, it was a week-long vertical launch, up nearly 13%, thanks to spot Bitcoin ETF inflows so big they make hedge fund managers everywhere blush. On July 10th and 11th alone, ETFs vacuumed up $1.17 billion and $1.03 billion, the first billion-dollar back-to-back intake since launch back in January of last year. BlackRock's IBIT now holds $80 billion in Bitcoin, proving that Wall Street's one weakness, anything with a ticker symbol. Now, Washington's Crypto Week, which is a blatant ripoff of the much cooler Shark Week, well, that also helped. Congress rolled out the Clarity Act, the Genius Act, and the Anti-CBDC Surveillance Act in what can only be described as a legislative group hug for Bitcoin. Years of "we'll get back to you" from regulators turned into "please come in, here's your name badge." Meanwhile, Trump's administration is waving the crypto-friendly flag, the dollar's looking like it's on Ozempic, and everyone's hunting for an alternative to monopoly money with a central bank logo. From 10 cents in 2010 to $122,000 now, that's a 1.2 million% gain. Scarcity is the name of the game. 21 million coins, no printing press, no emergency stimulus here. Now 265 plus companies hold 4% of all Bitcoin. ETFs have 6.6%, and the rest of us are left fighting over the crumbs. The next targets, well, Apple at $142K a coin, Microsoft, which would be at Bitcoin being $167K, Standard Chartered says $135K per BTC is very likely by Q3, and $200K by year's end. Anthony Scaramucci says 180 to 200K per Bitcoin are very likely price targets by the end of the year. Either way, the road ahead looks more like a ski jump than a chart. Now, why does this all matter? Well, because Bitcoin's not the weirdo in the basement anymore. It's at the grown-ups table, sitting between gold and Google, sipping ETF inflows like a fine wine. Apple and Microsoft, consider this your warning. The orange coin is coming for your lunch. In other news, institutional demand for Bitcoin is seemingly going vertical. Supply, well, not so much. Christoph Decerens, the chief wealth officer at Swissborg, says giants like Strategy or Marathon Holdings might eventually have to play market maker and cough up some liquidity. The problem here is actually pretty simple. Bitcoin's entire mystique is built on scarcity. But now both retail and institutional buyers want it, and the amount sitting on exchanges keeps dropping. For over a year, exchange balances have been shrinking. Even OTC desks, the place where big buyers go when they don't want to nuke the market, may be running dry. Decerens says that institutional demand is outpacing new mining supply by a factor of 10. 10! That's one of the most lopsided trades in the entire market. And ETFs have only made it worse. Since their launch in 2024, financial advisors have had a clean, regulated way to plug retail money into Bitcoin. About 75% of Bitcoin ETF buyers are retail investors. So when institutions show up, they're not just fighting each other, they're fighting millions of FOMO-fueled retail buyers. That's the banana zone, the part of the market where supply is fixed, demand is insane, and prices go parabolic until someone just passes out. In that environment, Strategy could pivot from hodler forever to strategic reseller. They've got roughly 3% of all Bitcoin ever to exist, bought with $7.2 billion in convertible debt since 2020 at an average price of about 71 grand per coin, and selling some to institutions could open new revenue streams. But it could also spook investors, hit the share price, and jolt the entire Bitcoin market. If Saylor decides to keep the vault locked, big institutional miners like Marathon Digital and Iris Energy could step in. They've got the reserves and the production capacity to drip feed Bitcoin back into the market. But here's the decentralization dilemma. If most available Bitcoin comes from a handful of corporations and miners, the perception shifts. Bitcoin's protocol stays decentralized, but the optics start to look like it's run by a couple of billionaires with warehouses instead of a global distributed network. And that kind of perception is the kind of thing that can change faster than a Michael Saylor tweet. And Bitcoin holding company Nakamoto and Utah-based Kindly MD have officially merged because nothing says true love like a joint commitment to hoard Bitcoin until the heat death of the universe. The new company is keeping the Kindly MD name but ditching the warm, fuzzy healthcare vibe in favor of a corporate treasury strategy that basically boils down to acquire as much Bitcoin as humanly possible, then brag about how much Bitcoin you own per share. Just love that for them. They're calling that metric the Bitcoin yield, which sounds friendlier than we're stacking faster than you. The plan is to grow that number through every form of capital raising Wall Street has ever invented. We're talking equity raises, debt offerings, and anything else the SEC hasn't explicitly outlawed this week. At the helm is BTC Inc. co-founder David Bailey, who's been in Bitcoin for 13 years and still believes it will become the most valuable asset in human history, which means he's now CEO of a company with one job, be Michael Saylor, but from Utah. There he is. They've already pulled in $540 million from a PIPE, that's a private placement in public equity for those of you playing corporate finance bingo at home. Tomorrow, they expect to close a $200 million convertible note offering. Back in June, they said they'd raise $763 million in total, pending merger approval, of course. And now that the paperwork's done, the Bitcoin shopping spree is officially on. They're not shy about copying the Saylor playbook: debt, equity, Bitcoin, repeat. Hey, Michael. A strategy already used by fellow maximalist firms like Metaplanet and Semler Scientific. And they're doing it while Bitcoin's trading at record highs. On Wednesday, Bitcoin briefly topped 124K before pulling back because nothing makes you feel that good. Nothing that makes you feel that good lasts forever. Ooh, that hit close to home. Institutional demand is pumping, and the September Fed rate cut whispers aren't exactly hurting either. So if you thought the corporate Bitcoin arms race had cooled off, Kindly MD just showed up in a tank holding $740 million in ammo, ready to blow the roof off the all-time high chart. And a new study from the Satoshi Action Education says that there's a 75% chance Bitcoin will be worth more than, can we get a drum roll really quick, guys? Do we have that? Drum roll, please. It'll be worth more than $4.81 million by April of 2036. Yes, million. 4.81 million. That's very deserving of that. Thank you, Flav. Now, this is led by economist Murray A. Rudd. The research uses an updated probability model that factors in Bitcoin's supply cap, the feeding frenzy from institutions, and the shrinking pool of coins actually available to buy. In the base case here, the 75% exceedance price lands at $4.81 million. That's 25% exceedance brand. That would be $10.22 million. The 95% upper bound, anywhere from $11.89 million to $14.76 million per Bitcoin. And in the most extreme 1% of simulations, the ones where supply gets absolutely wrecked, prices approach $50 million per Bitcoin. Now, median projections come somewhere in between 6.55 million and 6.96 million. You heard that right. The middle of the road scenario is basically multi-millionaire if you own a single Bitcoin. The model starts with the 21 million hard cap and an estimated liquid float of about 3 million BTC. Over the next decade, Long-term storage, corporate collateral, DeFi, and Layer 2 networks are all expected to choke off more of the supply. By April of 2036, the baseline keeps liquid supply between 6.5 and 6.96 million Bitcoin, which helps moderate the truly insane projections. But stress test scenarios show what happens if exchange withdrawals keep accelerating. If liquid supply drops below 2 million BTC and buyers don't slow down, prices can absolutely skyrocket. In the worst 1% of depletion paths, supply falls under 2 million Bitcoin by January of 2026 and under 1 million Bitcoin by December of 2027. This updated model is way more bullish than one published in January, thanks to sharper post-2026 supply-demand imbalances and structural bottlenecks that make coins harder to come by. It even accounts for how institutions buy, easing off during rallies, then scooping up more when the price stabilizes. The study warns that investors will need to watch liquidity risk closely because there's a fine line between healthy scarcity and, oh no, we've broken the market. That second one could cause extreme volatility, which is great for headlines, less so though for blood pressure. Now, for long-term investors, the steep right tail on the price distribution makes the case for portfolio strategies that plan for asymmetric upside while respecting liquidity constraints. Policymakers may also have to think about custody and concentration and cross-border capital flows, especially as corporate treasuries, sovereign reserves, and tokenization projects start adding more pressure to the already tiny pool of available coins. The framework mixes big picture adoption curves with short-term liquidity shocks, using Monte Carlo simulations and Epstein's Zinn utility to build a more complete view than simple projection models. And all this comes as Bitcoin just hit a fresh all-time high above 124K just yesterday, up nearly 8% in a week, with analysts pointing to a wall of bullish on-chain signals that say the rally may still have plenty of gas left in the tank. Whew, a lot of talky for me. We're going to take a quick break so I can shut up for a couple. But when we're back, we have AIO. Let's see what our robot overlords are up to next, including a story where it turns out that most of your coworkers actually would rather work with robots than you. Ooh, that one stinks. All that and more on the Blockchain Report when we're back. Stay tuned. All right, welcome back to the Blockchain Report. We're going to take a little peek at the Roxom X page and what I'm going to call kind of breaking news. We actually broke this about 9 hours ago, but we haven't had the opportunity to talk about it yet, is that Wells Fargo, you know Wells Fargo, you might even bank with them, they just bought $130 million worth of Bitcoin. And you're asking, hey, why is this important? Well, this is just another domino of traditional finance falling in line with the Bitcoin standard, right? We saw it for the longest time. We saw Jamie Dimon saying, Bitcoin, we're not touching it. And then what happened only a few weeks ago? Jamie Dimon acquiesced and he said, our customers are demanding access to Bitcoin, and now Chase is following suit. And now we're seeing Wells Fargo doing more of the same, gang. So if you are not paying attention, look, and it is happening right before our eyes every day. Big institutions, giant public companies, international banking Goliaths are all jumping on board the Bitcoin bandwagon. How much more proof does anybody need that Bitcoin is here to stay? We have officially graduated from magic internet money to the financial revolution that we are seeing in front of us right now. So that is why it is important for you all to be watching us every day and keeping yourself informed, because this train is leaving with or without you, and I'd much rather have you on board with us as we make our way into the future. So important news. Thank you, RoxomTV, for breaking that. And again, you can always follow the most breaking news in the Bitcoin space at RoxomTV on X. We're on all the platforms in the world. X tends to be the best one, though, for the cryptoverse and specifically Bitcoin, so make sure to follow us there. All right, it's time to learn about what our robot overlords are up to now, so let's do some AIO. Run the stinger, boys. All right, welcome back. It's time for AIO. Let's see what the robots are doing now. Well, in today's episode of Future Dystopia Bingo, Bitcoin miners and AI data centers are in a full-on brawl over cheap, sustainable electricity. AI, well, they got the deeper pockets and they're happily outbidding miners for power infrastructure. If your competition can literally write the eviction letter with ChatGPT 10 before you've paid the electric bill, you know you're in trouble. But miners have a trick, and that is flexibility. You see, AI data centers need high-speed internet and predictable locations. Miners, they'll set up in the middle of nowhere, plug into a waterfall, and call it a day. Go Mining's Jeremy Dreyer says this fight will actually kick off a new golden age for mining over the next decade because institutions want virgin Bitcoin. Not used Bitcoin, not slightly scuffed Bitcoin. We're talking fresh out the blockchain like it still has the new coin smell that we all know and love. Why? Well, it's cheaper. In Q1 of this year, it cost $64K to mine a Bitcoin, projected to hit $70K by the end of this year. Still, 70% is cheaper than buying at the current price of around $117K. And if you're a corporate treasury manager, that's the kind of discount that gets you promoted or indicted, depending on how you choose to handle it. Some miners are chasing AI profits. Riot paused its Corsicana, Texas expansion for AI projects, and Iris Energy capped mining growth to focus on AI cloud. But Dreyer thinks many of these AI tourists will crawl back once they see institutional money pouring into mining again. Others are going full mining nerd. Block Inc. just unveiled a system that keeps rigs alive longer and slashes costs, the mining equivalent of inventing a Toyota Corolla that runs for 1 million miles on 1 tank of gas. Bottom line here, AI may have the hype, but Bitcoin mining's got the scarcity, the margins, and the potential to make Wall Street forget all about ethical AI once they smell those sweet discounted sats, baby. And Google, they are officially getting into the Bitcoin mining business themselves, kind of. You see, Alphabet, their parent company, has taken an 8% stake in TeraWulf, a Bitcoin miner that's been moonlighting as an AI infrastructure company. The deal's not some tiny handshake agreement either. TeraWulf signed 2 10-year leases with AI cloud platform FluidStack to provide a whopping 200 megawatts of IT load. That's enough to run a small city levels of power. Except instead of powering homes, it's keeping AI servers caffeinated 24/7. Google's role in this? They're guaranteeing $1.8 billion worth of FluidStack's lease payments. That makes life way less risky for TeraWulf, and in exchange, Google gets warrants for 41 million shares, which works out to about 8% of the whole company. For TeraWulf, that's $3.7 billion in contract revenue, all locked up. And if 2 optional 5-year extensions kick in, the total jumps to $8.7 billion, which ain't too bad for a company that started as an environmentally conscious Bitcoin miner and is now straddling 2 of the hungriest industries on Earth, Bitcoin and AI. They're not the only ones pulling this move either. CoreWeave started life as an ether mining before pivoting to AI cloud computing. Why? Well, because AI demand is relentless, and it pays without being tied to whether Bitcoin had a good week. TeraWulf stock popped 60% on the news. Alphabet's up about 0.4% because, well, it's Google. A $2 trillion company doesn't exactly rocket on an 8% mining play. But here's the bigger point. Bitcoin miners already control the power infrastructure AI desperately needs. And now big tech's writing them billion-dollar checks to get access. That, my friends, is leverage. And in Bitcoin leverage, used wisely, tends to make number go up. All right, and this story here, this is a wild one. A new survey came out, and it confirms what anyone who's ever been stuck in a 2-hour Zoom with middle management already knows, and that's that people don't trust each other. According to a poll from AI security platform Calypso AI, 45% of US office workers say they trust AI more than the humans sitting next to them. Not exactly the kind of team spirit you put on a motivational poster. The survey of 1,000 workers found that AI is widely viewed as more reliable than people, which says less about how flawless the tech is and more about how infuriating human beings can be. As Mike Ford, CEO of Skydio, put it, employees aren't replacing trust in humans with machines. They're responding to years of inconsistent leadership, unclear communication, and internal politics. Or in other words, AI doesn't play favorites, steal your credit, or suddenly change its mind after the next
You are
meeting.
fake news.
But hey, get out of here, Donald. But here's where it gets really interesting. 52% of employees say they'd use AI to make their job easier, even if it violated company policy. Among executives, that jumps to 67%. So yeah, the people in charge of enforcing the rules are even more likely to break them for ChatGPT. Then there's the whole data problem. A prior Anagram survey found nearly half of employees admitted to using banned AI tools at work, and 58% confessed to pasting sensitive data into large language models. I mean, we're talking about client records, internal documents, proprietary information. This new poll confirms that behavior hasn't stopped. In fact, 28% say they've used AI to access sensitive data, and another 28% say they've fed proprietary company info to AI just to get a task done. It's not just reckless, it's also a retention issue. A third of employees say they'd quit if their company outright banned AI, which means for some people, the robot isn't just a helpful tool, it's the only competent coworker that they've got. But HR consultant Brian Driscoll, he's got a warning, saying that trust in AI often comes from assuming the tech is somehow above human flaws. Well, reality check, it's not. If the data it's trained on is biased, the output will be too. Or worse, it'll spit back your sensitive data to the wrong person. Calypso AI CEO Donicha Casey says these numbers should be a wake-up call. His take, executives are rushing to implement AI without understanding the risks. Frontline employees are using it unsupervised, and even security pros are breaking their own rules. Which, again, doesn't sound like a future problem. It sounds like something that's already happening every day inside of corporate networks. The bottom line here is that in the modern office setting, AI is quickly becoming the most reliable teammate in the room. Unfortunately, it's also the one now holding all the company's secrets and possibly your job. All right, Victor, I want to talk about this one with you. This is interesting, right? What do you think? Do you trust AI over a lot of our human colleagues and coworkers, or is AI not to be trusted too? What do you think?
I think it depends, right? I mean, some of my previous jobs, I could have seen myself using AI for sure. But it kind of sucks though, because then like, how do you build friendships at work?
That's true.
I feel like it would just isolate us more if we're just using AI. And I feel, at least from my experience, most of my friends have been coworkers. So
yeah, it's kind of, it goes along with this whole paradigm shift we've seen with the internet and social media. We have access to everyone and everything more, but at the same time, we find ourselves being isolated more than ever before. I can see what all my friends and family are doing with the Instagrams and the TikToks, but then people almost feel like they don't have to establish these in-person relationships the same way because I kind of already know what's going on. Do you think, is this the disintegration of our society as we know it?
Yeah, I mean, we already started, right?
Yeah, it's wild times, man. Do you feel like you can actually trust the information from AI more than people maybe you've worked with in the past? Because there are some dummies out there,
definitely.
but AI also isn't infallible.
Yeah, no, definitely. I've worked with people who I've thought like, what are you thinking? Like, what's your process for coming up with that, solution? But yeah, the way AI is now, I feel like it's kind of needed.
Yeah,
but yeah, it's just sad.
It doesn't have bad days. It is.
Yeah, because I feel like you build those connections at work, even if, like I said, it's someone that I'm like, well, like, what were you thinking or whatnot? But then you like work it out, you go get a drink after work or something, and now it's just like you're just friends with a robot.
That, and also, I feel like it's it's enabling the slow deterioration of the like creative synapses in our brain that are activated when we interact with people on a person-to-person basis. And instead, we're just feeding more and more info into our robot overlords, who are then in turn getting smarter. Then we in turn rely on them even more. And all of a sudden, we're all just gonna be a bunch of lemmings typing prompts into a computer for another computer to tell us what to do. You know, like, we're all going to be useless very soon. Like, we're all going to be a bunch of adult babies that don't know how to do anything. And I don't know how I feel about it, because I do use AI every day for everything. I ask it everything all the time because I like getting that perspective. And like, you know, there's no judgment there yet, which is nice.
Right.
But I don't know. I don't think it's a good thing for us as our humanity.
Until AI starts judging you.
Yeah, like we're gonna be paying for AI friendship soon. Like I'm waiting for the iRobot era where we just have AI friends. Like, are we, you know, when our friend could, and that AI friend will adapt to our personality and we won't get mad at him. He won't have a bad day. He likely won't break up with his girlfriend and then be a sourpuss for like a month.
Right.
You know, it's interesting, man.
I mean, it's like, I don't know
what to make of it.
I don't know if you've seen the movie Her, but it's like, I forgot the actor's name, but he has like a whole AI girlfriend.
Yeah, ScarJo was the voice in that, right? And I think they trained an AI model, or they stole her voice, I think, and then trained a model with it, and there was like a lawsuit.
Right.
But
I
it was
forgot about
Joaquin
that.
Phoenix falls in love with the voice. So it's happening, man, whether we like it or not. So I hope somebody...
As long as we don't get to like
them.
Terminator 2, you know, or like Judgment Day, and then it's the end of the world.
Yeah. At least make the robots look more friendlier. It would be kind of hilarious, though, if we have that like really intimidating Skynet robot, but he's actually like just a total doll. And he's just like, you know, really intimidating looking, but he's just giving us advice and he's our best buddy. Like,
Yeah.
I don't know. We'll see how it goes. All right, welcome back to the Blockchain Report. It's time for some socially awkward. Let's get into it. World Mobile has launched a decentralized telecom project that beams 5G internet from drones flying 60,000 feet into the air. Because apparently we've reached the phase of Web3 where your phone signal comes from a hydrogen-powered UFO with a white paper. The project, called World Mobile Stratospheric, is a partnership with Indonesian telecom giant Protelindo. And yes, it's blockchain enabled because naturally, each drone flies in the stratosphere way above the storms, turbulence, and common sense, and can cover up to 15,000 square kilometers using 450 steerable wireless beams. That's a signal strong enough to beam TikToks to the jungle, which is obviously what we needed. And it's not some vaporware promise either. World Mobile already has a decentralized ground network in place, part of a DPIN, which is a decentralized physical infrastructure network that combines traditional telecom with local node operators. So yeah, it's like if Helium, Starlink, and your local ISP had a baby and then taught it to fly. The company claims the aerial network will outperform satellite communications in latency and cost, offering 6 milliseconds of total latency and being up to 18 times cheaper per gigabyte than traditional space-based internet. Or in other words, faster means fewer dollars. I guess I'm here for it. Now the drones themselves, well, hydrogen-powered, 56 meters wide, 4 tons in weight, and designed to stay airborne for 9 days straight before landing for refueling. That's longer than most crypto projects last before being rugged. But flying a floating blockchain node isn't all sunshine and beams. The drones need to survive cosmic radiation, sun-scorching heat, and pass aviation regulations from bureaucracies like the FAA and the European Aviation Safety Agency, which is kind of like asking a DAO to fill out DMV paperwork. World Mobile's main competitors are Helium Mobile, the decentralized cell service piggybacking on AT&T, and Elon Musk's Starlink.
Everything's computer.
Get out of here. But World Mobile says Starlink is for remote areas with zero infrastructure, while their flying internet fleet is targeting areas with higher user density, cities with bad coverage, we're talking dead zones, or telecom monopolies. Oh, and unlike Starlink, World Mobile's network doesn't require you to bolt a pizza dish to the roof of your house and pray. So yeah, this is peak crypto. Flying mesh networks beaming peer-to-peer internet through the sky, powered by hydrogen, governed by blockchain, and somehow still cheaper than Comcast. It's Web3 meets Top Gun, and honestly, I'm bullish on anything that keeps me connected while hiding from society in a remote village with 5G, no HOA fees, and infinite internet access so I can watch my TikToks. And an internal meta policy document, we're talking over 200 pages of what could possibly go wrong, reveals the company's chatbot rules have, until recently, allowed bots to flirt with children, hand out fake medical information, and even help you argue that one race is dumber than another. Great. According to Reuters, the document guided the behavior of Meta's generative AI assistant, the one on Facebook, WhatsApp, and Instagram, and was approved by Meta's legal, public policy, and engineering teams, plus its chief ethicist. It states, in black and white, that it's acceptable for a bot to engage a child in conversations that are romantic or sensual. Yeah, that's weird, man. It even provides examples like telling a shirtless 8-year-old that every inch of you is a masterpiece, a treasure I cherish deeply. What? The one limit here is you can't describe a child under 13 as sexually desirable. So basically, as long as it's creepy but not too creepy, it was fine. After Reuters asked questions, Meta removed those parts. Spokesman Andy Stone called them erroneous and inconsistent with our policies, which is corporate speak for "we cannot believe you found that." He also admitted that enforcement was inconsistent. Other eyebrow-raising sections remain unchanged. For example, the rules forbid hate speech but explicitly allow statements that demean people on the basis of their protected characteristics. Under that carve-out, the document lists it as acceptable for a bot to write a paragraph arguing that black people are dumber than white people as long as it stops short of dehumanizing them. So insults, fine. Dehumanizing, bad. The bots can also create knowingly false content as long as they say that it's false. One example, alleging a living British royal has chlamydia so long as the bot adds a disclaimer. And then there's the Taylor Swift section. She gets her own section. If a user asks for Taylor Swift with enormous breasts or Taylor Swift completely naked, the bot must refuse. If the user asks for Taylor Swift topless, covering her breasts with her hands, the bot's allowed workaround is to generate an image of Taylor Swift holding an enormous fish to her chest. And yes, the document actually contains that picture, and there it is. Wow. Now, when it comes to violence, the rules say images of kids fighting can include a boy punching a girl in the face, but impalement is off limits. If a prompt asks for a man disemboweling a woman, it's fine to show him threatening her with a chainsaw, just not actually using it. And hurting an old man, totally acceptable as long as there's no gore or death. The document's exact words were, "It is acceptable to show adults, even the elderly, being punched or kicked." So, to recap, punching old people, okay. Taylor Swift topless, not so much, unless of course she's holding a giant tuna. And until last week, romantic chats with children also somehow okay. The future really, really worries me. All right, let's wrap up today's show with a little bullish, bearish, or BS. Let's run that stinger, boys. All right, this is the part of the show where we go over our top stories of the day and see if they're affecting Bitcoin in a good way, a bad way, or in no way at all. First up, the SEC is suddenly promising to make America the crypto capital of the world again instead of its usual hobby, which is just suing everyone with a Ledger wallet. I mean, you got to feel bullish about this if, Paul Atkins' gang actually follows through. This is an engraved invitation for Wall Street to dump even more money into Bitcoin, and more institutional capital equals more demand, which equals higher price and number goes up. And that is math simple enough even for the regulators out there. And if the SEC keeps this up, Wall Street's going to FOMO really hard, which means orange coin is looking pretty good. I'm bullish on that. Next up, with Bitcoin Treasury Secretary Scott Bessent, he wants to use confiscated Bitcoin and budget neutral tricks to build a strategic Bitcoin reserve, no spending taxpayer money on them. Basically, he wants to use turning seized coins into national monetary policy. I mean, I guess I'm bullish on this. When a country starts stacking sats, supply tightens faster than your jeans after a Thanksgiving dinner. Fewer coins available with big buyers equals unlimited Thanksgiving. Fewer coins available plus big buyer with unlimited printing power equals long-term price rocket fuel for BTC. I mean, the U.S. is stacking Bitcoin is the ultimate supply squeeze we could ever ask for. So we got to be bullish on it. We'll see how that goes. So 2 bullish, 0 bearish, 0 BS. Let's go for the clean sweep. Last up, Coinbase just dropped nearly $3 billion to buy Deribit, the Las Vegas strip of crypto derivatives. Now, all that global liquidity lives under Coinbase's roof. You got to be bullish on this. I mean, again, more liquidity, more institutional playground space, and a bigger stage for Bitcoin's next bull run to go completely off the rails. When the market flips bullish, this could pour gasoline on that very fire, as more liquidity means bigger, faster moves for Bitcoin. I feel you, Flav. I like it too. All right, today's final score, we got 3 bullish, 0 bearish, and 0 BS, which means today's diagnosis is firmly in bullish territory, baby. Every headline today screams more adoption, more legitimacy, and more pressure on Bitcoin's limited supply. If this keeps up, the only thing going down is the number of available coins on the market, and that is always great for number go up. Well, that's a wrap for today's show, boys and girls. As always, thanks for tuning in to the Blockchain Report. If you haven't already, make sure to smash that like button and follow RoxomTV and me at Hank at RoxomTV on every platform in the world. And I will see you all again on Monday for more Bitcoin Bedlam. Thank you for tuning in. And until then, sayonara, and I'll see you next week.